Hello, hello, hello. Good morning, everyone. Happy Friday. TGIF. Happy Friday. Yay, yay, yay. PCE out of the way. So, that's where we sit. PCE, pretty much a non event. Besides, the big things that jumped out to me personal income and personal spending. Huge drop in those. We'll take a look at that. Hopefully, Bob can jump on in a couple minutes. I know he's very busy this morning. Good morning, Davey. Good morning, Josh. Happy Friday, Patrick. Good morning, Sashi. Anissa. Happy Friday, options. 22. Good morning, George, and everybody else hiding in the background who doesn't say anything. By the way, if you are new here and hiding in the background, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please leave some more comments and smash that like button. Thank you very much. So let's see. Hey, good morning, Sterling. Good morning, Jason. How are you? Thank you for putting a comment in. Welcome, welcome, welcome to the channel, whether you've been here for a while or not. I'm glad to have you. All right. Again, we'll get Bob's take on stuff, my take. Core PCE 4.6 versus 4.7, prior 4.8, so slight improvement there, but I mean, we're talking a slight drop there. Price index, that's coming in a little better. Month over month, expected 3 coming in 1, so improvement there. PC price index month over month dropping it into contraction from expansion last quarter. The big thing though, personal income forecast 0.6, actually 0.2. The consumer's getting tight, and personal spending expected 0.4, coming in 0.1. Those are not strong numbers for continued consumer growth and economic expansion based off the consumer can keep buying. Consumers really getting squeezed. So do pay attention to that, but we got some volatility off of those numbers. Again, we'll get Bob's take if he can jump on. Powell, remember, 30 minutes after the open, Powell starts speaking. And consumer sentiment. Now, I'm still expecting these numbers to be decent. I mean, it's still major pullback. But consumer sentiment, remember, it is summertime and people in the summer, and gas prices have pulled back in the summer. I'm still expecting this to be decent in lines with the forecast. But the bigger thing today is going to be Powell. And then what else do you have? And by the way, with that consumer sentiment, it's going to be also the inflation expectations, how that comes in. And then we got just Powell speaking. Anything else to come out of Jackson Hole, but everything will pretty much be keying off of Powell. And then we got the rig counts for any of you crude traders. S&P slightly up. Now, Google pullback, but your other mega caps are slightly up. So sort of a mixed market going into the open with Powell's speech. Remember, we do have those doubles that have still triggered. FMOC 50-50 with the odds right now after those PCE numbers coming out, the 75 dropping. So we have 50-50. And we are virtually at neutral gamma. So sell-offs go into negative gamma, but unless we start getting a significant sell-off, the negative gamma is minor until we start getting, especially, down to the 4,100 area, closer to that. On a rally, you are going into positive gamma, so dealers, again, it's close to zero, but if a rally continues, you get dealers having to sell into the rally. Do also keep that in mind. Now, let's get to the price action real quick. So we just completed the double pattern this literally completed while I was talking. Little pullback, then the rally up. I was watching to see if we had a potential double, but that's off the table. So those double patterns are completed, at least in the S&P. Remember, we're still into a clear path move, and 50% of this retracement is 42.1925. 62.5 is 42.46. Let me change the color on those real quick. Really quickie. So there we go. That's where I'm paying attention. We get above there. Let's say we get Powell triggers the more rip your face off rally. Key breakdown zone is about 42.60 to about 42.66 above there. But remember, at least on a 1 to 4 hour close above the 62.5, then I'll start watching for a retest of the potentially high area. We did pull back overnight to the 4 hour rotation zone and strong rotation back up. Daily cycles still heading to the top. I am going to be super interested from the potential short side with the cycles getting to the top again and weekly cycles still at the top. So be a little patient with that from my perspective. But given the clear path move, unless Powell gets really super hawkish and sort of the line of sand that I'll be watching, I'm going to bump this down a hair. More so to about 41.80 area. If we start getting acceleration below that, wipe out this whole bounce candle, then I'll start getting into more bearish. And remember, we have that choppy clear path move down here. Choppy. There's lots of stopping points still in this. This is a cleaner clear path to the upside than to the downside, but you know, you reverse this whole candle and start breaking below 41.80. You could get some interesting pullback. Other than that, I got to stay in bullish mode, even if we get a pullback to this 42.08 area. Let's see. I think I just went through that clear path to 42.66. I mean, that's where we sit. And the technical end of the clear path, remember, is 42.87. The breakdown zone is the first target, and that's your major breakdown zone, that 42.60 to 42.66. Tom, that's actually not because you're not on here on days that it turns red, so every day market goes green. That's not a true statement. You just even can't, you're losing any credibility you could even attempt to have because every day the market does not go green. And if you listened, we had a bottoming pattern, which you probably don't, because we had a bottoming pattern and we've completed it today. That doesn't mean we're done because we're into a clear path move. Geez, people just don't know how to trade, or you know, there's just so much ignorance out there. Good morning, Rams of Fall. Thank you, Chris. Good morning. Yeah, I agree. Everybody smash that like button. Smashed every day. Thank you, Rams of Fall. If Powell is smart and actually wants to handle inflation, he will rug pull the market today. We'll see. We'll see. I mean, that's why I'm prepared for stuff either way. I think the market still wants to rally a bit more no matter what he says. Oh, we're not feeding the trolls. I'm going to sometimes say stuff because we're getting more new people here, and I don't want people to think that this is a one of those channels. So, NASDAQ completed the double. Look at that. Nice little pause again. You know, I think we provide a lot of good information. Nice 3-bar pullback to the rotation zone. Rotation back up into the clear path move here. Next key levels. Let's put on the retracements. $13,282. Do not ignore $13,221 because remember, anywhere in the 50% to 62.5, you could get a rollover to $13,396. And then you technically have another breakdown zone here. The NASDAQ, though, I'm watching for if we are rolling over. NASDAQ, you know, we could see some acceleration to downside. Key level I'm going off of now is right around 13,080. We start breaking below that, wipe out this, and the corrective move. Then you're into a choppy clear path move to the downside. And look at this. Looks like Bob can join us. Looks like Bob. Let me halt everything. I got to hit the magic Bob button. Magic Bob button is hit. Technical analysis be darned. Bob's on.
I kind of wanted to hear the technical analysis.
Well, we're stocks always go up, Bob. There you go.
That's it. They always go up.
What are your take on the PCE numbers, personal spending, personal, because that was the bigger thing that jumped out to me, but let's hear your take.
Yeah, personal spending, a really big miss. And again, I didn't. I told you guys that I would look into it. Personal spending is not inflation adjusted. Okay, so they just take the total value of the dollars spent. So if in a drop like this, it's actually a bigger negative. If the total value of the dollar spent is lower and gas prices have fallen and energy prices have fallen, it's even lower than that, right? Personal income tends to show the drop in things that the core doesn't measure. Okay, so in other words, part of the reason they talk about liking the core better is they say the volatile things like energy and food drop out of that. Well, if energy and food have dropped and personal spending has still dropped, that means habits have changed. Okay, at least in the short term. So spending is way down. It's down more than it actually reads here, just on a sort of top line view. Now, the headline at 6.3 is still a very large number. That's a year over year PCE. The core dropped by a tenth versus forecast and 2/10 versus previous. Now, this lines up with the CPI because this is July. Remember, we're at the end of August. So you would expect it to be in line with what the CPI did, even though there's a gap between the two ultimate levels. You would expect it to drop because the CPI dropped. They expected it to drop less. It dropped more. This is not a big deal to me. The actual thing that strikes me quite a bit, actually, is core PCE rose, even though it missed expectations. I'm hitting the cough button for a second. All right, so it is still up. So core PCE still rising. I don't personally think, even though bond yields are falling right now, we've got the 10-year at 302. I believe the settlement on the 10-year yesterday, 303. So it's not really dropping much. I suspect as these numbers sift through the market, that bond yields will probably either flatten out here or slowly start to rise. And I mean across the curve. Now I see equities rallied after the number. Not that much, right? I mean, it wasn't that big of a move.
It was a decent sized move. Well, there was a lot of volatility after the move, but then you still have, I mean, we still got a lot, Fed speaks coming out now. Like, I think that's more so reacting to some of people like Harker and everything else talking, and who I think was Bostic.
Yeah,
So
I'm looking here and I'm seeing a move of about what, 60 basis points, maybe
we had
67 basis
let's
points, something like
I
that.
mean, we started here. I can get down to the 15 minute. Here was where the numbers came out. So we've roughly rallied. I'll just go from the close up after this to, let's go from last bar's close. We were up 54 basis points.
Okay, so about a half of 1% rally. You're seeing a slight move down now. Yields are starting to climb a little bit. Again, I don't necessarily think, look at Rich.
Rate should be 10%. That would be a hike.
Hey, we're on the same page. I don't think this is enough of a drop. Okay, that's my thing. So you look at like the core CPI versus the core PCE. The core PCE rose. So that is not a peak. Now, again, when people talk about a peak, they're talking about the second derivative. And what I mean by that is the change on the rate of growth, right? So if last month's PCE, what was last month's core PCE? Up 0.6 month over month. It was up 0.1. So that means it rose slower, right? But it rose. And in that particular time period, since these July figures, well, let's take something like crude oil, for example. I'm just going to look at crude oil real quick. You can put the chart up, Mike, but I'll measure it. Since the period of time that this closed out, oh, I don't want a 30-minute. Let's go here. So it would have been a fall in July of approximately, wow, that's a big drop. There's June. There we go. Crude oil in July dropped about, come on, dude. I could have let you do it. It would have been a lot faster. This is approximate, okay? Approximately 17% or so. Since then, crude oil has risen about 1%. Okay, this is all approximate. So from July to August, crude oil prices are actually back up a little bit, just a touch. They fell throughout, but then they rallied back versus July's close, not by much. I could have just looked at a monthly, couldn't I?
Yeah.
That would have been much quicker. That would have been much quicker and less embarrassing. Okay, so for the month of July, according to this, we saw a drop of 6.7%. Month of August, we saw another drop of 5.7%, but they're climbing back from there. So that's going to affect headline PCE, but not core PCE going forward. If the moves like this continue, they're not going to get their sort of peak that they want on that second derivative. If we continue to see crude oil rally, continue to see copper rally, copper's rallied. So some of the commodities that they were comfortable with, you got China doing stimulus. Copper on a monthly basis has bounced back quite a bit from the lows. And actually, we have a positive month for the month of August on copper. It was negative, and now it's positive. So looking at it from that perspective, I don't think the PCE numbers will adjust what Powell was going to say. That doesn't mean I know what he's going to say. I'm just saying it's not going to adjust what he would have said. I don't think he's going to throw in, well, we're looking at it from this way, but this month's PCE numbers were pretty weak or pretty strong. I think they're right in where it was.
Okay. So
That's
now we're all dependent on what Powell says. I mean, that's what the market's going to trade off of.
Yeah. I don't think these are weak enough. Okay. I just refreshed bonds. They're unchanged now on the 10-year, on the yield.
Look at this. Look at that with the double bottom.
See, that wasn't going to make its target, Mike. Remember? That was going to fail.
Yeah,
according to everybody.
It's why you got to trade the patterns. I'm not smart enough besides the patterns. I'll admit that fully. I'm just a dumb bald guy.
I sent you that picture of me bald, right?
Yes, you did. I like the picture of you bald.
I sent it to a bunch of family members, and one of my nieces, my goddaughter, wrote back, "Disgusting."
No, I think it's an improvement.
At the end of the day, my wife doesn't like it, so that's it.
No, Steve, this is what Bob would look like bald. Everyone, hold on.
Kristen yelled, "You be nice, Mike." I don't know if you heard that.
I did not, but that's what Bob would look like bald. I think that's a massive improvement. So, I mean,
when she made that looked so realistic. When she made that, she said that I should send out to my family, since my family's all in Chicago. Made a big decision because of the heat and just send that picture, but I didn't do it. I should have done that.
Let's see, Sterling, Bob, I know you detailed the fact that it's not practical to ship natural gas from here to Europe, but will UNG rise in sympathy with the expected rise in EU?
I don't think I ever said it was non-practical, Sterling. I think I said that. So right now, one of the LNG facilities, the refineries, okay, because processing LNG is a big deal. Okay, it's not an easy thing to do. And one of the refineries had a fire, and they're going to be shut down for the foreseeable future. So it's not that it's not practical. It's politically not necessarily a good thing, because if heating people's homes in the northern half of the country becomes really expensive because Germany decided to rely on Russia against the previous president's advice, and now we've got to ship gas here and drive up our gas rate, it's going to happen anyway, Rich. It's going to rise in sympathy, because there's always going to be a speculative part of the market that says this is going to happen either way. And I agree with that to a certain degree. When we get into a surplus, if we do, look, the base case for natural gas is this. We've been in a deficit for a long time. All right. Now, a lot of natural gas runoff comes from shale drilling. And shale drilling is, it's not on the decline. The wells are producing, but capital investment in shale in the U.S. is on the decline. So, and we've been in a deficit with natural gas supplies for months. So shipping it is not good domestically. It's not that it's not necessarily efficient. It's just we don't have enough refining capacity now to ship it there. If we had it, we would ship it.
So the winter is gonna be interesting.
Oh, that decision by Belgium is just.
I know Bob's referring to this. This is so. And then there was that push for Germany to restart their 3, and they're like, we'll wait and see. Literally, I mean, how moronic do you have to be at this point?
Where's Christoph? He'll tell you how stupid that is.
I mean, come on. Europe's gonna go. I mean, it's gonna be massive pain this winter. What are these people doing? I mean, we live in upside down world. We literally do.
It's difficult to dismiss conspiracy theorists who say this is deliberate when you see decisions that are just so dumb versus the human suffering that goes along with them.
How can I watch the Powell speech online live?
Bloomberg will have it, but there's several YouTube channels. If you have Bloomberg on your basic cable, you can watch it. Otherwise, you can go to Bloomberg.com. The TV used to be free, but I think right now it's a 15-minute, 20-minute trial, and then they shut you off. I don't remember. But if you have a basic cable package, you generally have Bloomberg. CNBC will probably do it as well.
Yeah, and if you follow Zero Hedge or go to Zero Hedge websites, they'll probably send out a link with it. They're generally on the ball with that. Here's how you watch Powell live. So if you don't have any other resources, either follow them on Twitter or go to their website, zerohedge.com, and they'll post something about it.
Also, you can just Google Powell speech on YouTube, and there'll be more than one channel carrying it live on YouTube. We got to figure out how to do that with Path Trading Partners, Mike. We'll just send everybody to Path Trading Partners YouTube to watch it live. Hey, Christoph, thank you for that. Can you put that up, Mikey? I'm excited to hear what Christoph's brother says.
I'll try to tell you something about energy mix, potential for nuclear energy next week. My brother works at Uniper, the energy company that is bailed out by the government. Well, that'd be very helpful.
Yeah, that's awesome.
Thank you for being a member of this channel, Christoph. And this is why this channel is so great. We actually have people who aren't about the pump, but about real information.
All right, I've got a special low float IPO announcement. I don't have one. Yeah, so that's it.
The low float IPO announcement is we don't trade low float IPOs. Go somewhere else.
I think we've lost NASCAR, but I'm doing a lot of research into that, and I'm pretty close to proving that these YouTubers get shares given to them by the IPO distributor, and then they pump them. It's basically the old boiler rooms. It's the same thing. It's
what's been done until with all those crypto coins, where the YouTubers got issued all the crypto coins, they pump it up, and then they're selling into the pumps, and then they bring in everybody else, and they're already out.
Yeah,
and that's what's disgusting.
Well, look, NASCAR's point is, what's the difference? Like if I make 3x or 4x and they make 10x, I don't disagree with that, by the way. I made 300% on my small cryptos, and then I got out. I got out when the technicals told me to get out. But it's gross what they're doing.
But it's not even that. It's not 3x versus 10x. A lot of these people end up losing a bunch of money because they're so late to the party, and it's still being pumped.
That's what I was going to say. It's a disgusting way. It's almost like saying somebody produced meth, you delivered it to the meth dealer, and you made a little bit of you made a cut. But what's the difference of everybody else? You don't really have anything to do with it. It would happen anyway. That's almost what it's like saying, I just don't want to deal meth.
And I don't want to be part of that. I'm watching
Breaking Bad again, and it just continues to confirm that I don't want to be a part of that.
And trading's tough enough with already losses, but you know, you got to take losses and everything else. But when you're blatantly pumping something and selling into the pump and knowing other people are going to be holding the bag, that's just
Yeah.
that to me is, I can't be a part of that.
Yeah.
Do you know there's better ways to make money? Just like don't need to
I'm
be a drug
tweeting out,
dealer, better ways to make money.
I'm tweeting out a pre-Powell prediction.
So I mean, we're open. The volatility will come at starting in 30 minutes. So again, my two key levels are essentially 4,200, 4,203. Minor pullback, but you can't get overly bearish until we break below 4182 in my book. Otherwise, we're just in this consolidation. Now, this was a pretty decent turnaround going into the open and couldn't even hit that 50% level. But again, everything's going to shift, you know, with once Powell starts talking, that's where it goes. Let's just peek in at the NASDAQ. Let's look at the Qs and the spiders real quick. NASDAQ again, if I want to fine tune this level just a bit. Let's fine tune it just a bit because this will either be the breakout or breakdown play for me. The breakout plays again above about 13,160, breakdown about 13,080, as I said before. Long or short Chinese U.S. listed companies? Well, they supposedly are going to agree to the audits. You know what? You start auditing some of these Chinese companies, I got to be short them. Because there's so much crap on the books there. So overall, if you just want a blind brush stroke, it would be short. But again, it's got to trade the patterns. And personally,
Yeah.
I'd steer clear of most of it anyways.
All right, I'm going to jump, guys.
All right. Thank you, Bob.
Yep. Talk to you guys next week.
All right, we're going to wrap it up. Potential shake and bacon. Yeah, but I need it to break down. You got your stopping point in the middle to help confirm that, but I need it to break down this other side. Okay. So this is a potential, but so far, again, you can see we've pretty much held the middle of the channel. And you're going to have major volatility going off. Let me just get, I'm not even interested in, there's going to be the broad market. So Tesla, again, Tesla double bottom, by the way, just wanted to point this out. Didn't put the targets up yet if you are trying to trade Tesla into this. But the market's going to react overall. Did this already hit the targets? Well, first and second are hit. With that, let me get to the Qs and the spiders because I know we got people trading that, and then I'll wrap this up. Remember, if we do break above this candle high of 320.60, target the gap fill as the first major target. 322.86 on a pullback. The key area now to watch for on a pullback? Nope. With your rising 1 hour rotation zone, I'd be watching about 318.95 to 319. That would be key. You start breaking below that, I'd start watching for the bigger pullback in there. But that's where we sit. It looks like technically we should be trying to attempt a gap fill. I'm still leaning to the bullish upside with everything. Spiders, break. Look at this. Look at this stop right there at that level. 419.50 area we had on here. A break above there. Gap fill. 422.15 pullback level at this point. That's pretty decent, possibly slightly. It's going to be a range, but about 417.36 to about 417.75 is your pullback area. I watch this 1 hour rotation zone. You break below that, then I'd be more leaning towards the shorts. Rich thinks it'll be red. Again, you know what? I really appreciate everybody being here. I'll keep going a bit until the open. I mean, until Powell's speaking. Uh, let's just take a look at some of these other stuff. Key level next on the rally for the Dow would be 33.5. Look at that, right at the 50% retracement. And then the next is this 33,686 pullback level. 33, essentially 33,280 to 33,300. I hope people are seeing how I'm getting these levels too. And it's not just the most recent stuff. You got to glance back and look at little key stuff. All right. See here how we reacted back here to this level. Nearly a key close, then a bounce above, then a rapid move away, a dead stop on, I'll retest that area, and then the move through and this most recent pullback. Sometimes it looks like, hey, I'm just lining stuff up, but that's what I'm seeing. So that's your key area on there. We start breaking down. Can't get overly bearish, though, because we have another stopping point here on the Dow. You see this level, too. Rejection. Breakthrough with support, coming back, pulling back, brief little dip below, but then emotional candle away. 33,285 starts tipping it into more bearish mode. Is it safe? Here's what I'm watching. Hold on. Let me get to this. Yeah, Smike, though, smash the like and come back. I'm trying to give you guys a little more information, and gals and everybody here. What I'm watching for is a bigger reversal pattern where we're still mismatched. We got daily cycles trying to push up. We completed those doubles. We could easily come up and still, like in the Dow, kiss the 200 again today, but everything's going to depend on Powell. We could come up. Now, let's say we roll over. What do we have here on the S&P? We have a head and shoulders, a pretty decent big topping pattern. We trigger that. I will start watching for a multi-week pullback potentially. At least a significant daily pullback, but potentially a multi-week pullback. We rally up, form a double top, then trigger the double top. I'll watch for the bigger pullback. Until a bigger pattern triggers, I cannot target downside price action until we get a bigger pattern trigger with mismatched cycles. Now, daily cycles get to the top. We already know weekly cycles are at the top and been pinned there and trying to roll over. We get cycles in play, and then we start getting more minor topping patterns. I can start playing it more to the downside then also, because we got cycles with sort of a downward anchor on it, and then I'll really watch for these patterns to be triggered. So that's how I'm analyzing it, but we still, remember, you can come up with theoreticals, you can come up with your analysis. Like I can say, okay, we have a potential head and shoulders here. Am I just going to say, oh, I got to short it now? No. Why? Because we could come up if the head and shoulders could not trigger, we could form a double. Do I just short up here if we make a potential double? No, because theoretically we could go through the 200 again. So I can come up with potentialities. But until something triggers, I got to trade the triggers, not what I think's going to happen. Too many people trade what they think is going to happen, or, oh, I'm going to try to front run this head and shoulders pattern. Well, what happens if it goes, Powell comes dovish and it goes on a rip your face off rally back to the 200? You're short here. The pattern never even completed, and you're trying to guess. Again, I'd rather give up some price action on the longer term for a higher probability pattern to trigger. Now, we get a little mini 15-minute double. Can you trade to the short side, or a 1-hour double, or some breakdown pattern? Yeah. But does that mean it's even going to trigger this bigger double or this bigger head and shoulders? No. Could you get a short position up here and then potentially trigger the larger short position and roll it into it? Yes, but that needs two different things to trigger. I hope this makes sense to people. How you can, let's say we got a little minor short position. Then it rolled into a bigger short position. Yes, you can roll a position because another bigger signal triggered. But you don't just say, I'm going to take a let's say we made a topping pattern here at 42.19 and the target was hypothetically 41.50. Does that mean I hang on for to 3,700? No. Now, if we just tanked and then triggered the head and shoulders, yeah, I could then roll it into a bigger position or part of it and re-add because I'll have taken some off. But then could I say, okay, I have a little left. Oh, wait, we triggered a bigger position. Now I'm going to add back? Yes. That's where I get so frustrated with these. I see this on YouTube a lot. Hey, we formed a 5-minute double bottom and now I'm still riding it 8 days later. Then you know what? Then you didn't trade the pattern because a 5-minute double bottom does not equate into a 8-day move. You could trigger another larger pattern, but if you're telling me you ran something up for 8 days based off a 5-minute pattern, you didn't trade that pattern effectively. You didn't actually manage your reward to risk. You actually just jumped on something and let it run. All right. Let's see. Dollar Tree weekly chart. Yeah. And then I'm going to wrap this up because I got to now prepare for some more stuff. Yeah, Dollar Tree. Again, that's, yep, first and second targets hit within it. And that would be a really nice break below this lows also from January. So we could really see this could be a major recession play. You got a fair amount. Look at this support down here. Right below the double top trigger. You got a gap. That could be a major reversal pattern. See, this is why we also wait. So we had this, it's almost a triple, but it's still valid on the, I'd only wait for that weekly close below here, but there's your Dollar General double also. Of course. BBBY. I'm so, what, that's little mini pump? These people, that's not even a pump verse talking about. So many of these people are going to be stuck. When they go into Chapter 7 or Chapter 11, it's going to be pathetic. Oh, but wait, whoa, where's my squeeze? Then they'll have the conspiracy theories. Jeez, this is garbage. Follow the unsecured bonds if you want to know what that's going to happen to that long term. Can you wrap the idea of how you would manage along from that 4-hour double bottom on the ES could be later today, but like the idea of logically rolling into longer term positions? Yeah, diamond hands. So if you wanted to, now I generally like to get things off at double targets because you get so many reversals. But if you wanted to, because you got the clear path move, instead of, I would have taken most off at the first and or the second and third targets. But if you wanted to leave a little on because you're going into a clear path move, then you could do that. And what I would do then is you start dropping back. You start dropping back below this first key target, unwind it. But that's where you go, okay. What I would rather do when you get these hard doubles like this is on a pullbacks, start watching for, okay, we've completed the target, so now I'm going to watch for, because these doubles are pretty strong targets. You start breaking back above here, I'm going to take another breakout play into the clear path. This would not be one based off this. I would lock this in personally on this kind of thing, just with everything that's going on, and then play a breakout play with a tighter stop given that. But if you wanted to, instead of taking your profits at the third target, I would leave it at a raise a stop again, raise a stop, and then say, okay, because we're going into a clear path, I'm going to take a clear path trade, and then continually raise the stops, like 50% level, raise the stop, 62.5% level, raise the stop. If you don't close above the 62.5 level, maybe unwind it. Definitely raise the stop up here at the breakdown level. Personally, when you complete doubles, I like to unwind it and then look for a re-entry pattern. But everybody can choose to trade this. This is becoming a more advanced trader and making it your own. What I teach here is stuff for people to understand some concepts, and I expect if people here are going to be successful traders and investors, for them to take these concepts and then make them their own. Don't try to be me. You're going to take the concepts and roll it into your own styles, your own time frames. What I'm trying to give everybody is why I stress risk first also. I want people to manage, as they're learning to become their own trader and investor, I want people to focus on managing risk and also focus on targets because it helps you manage risk. And then you're around the game for a long time. And if you're around the game for a long time, you have more time to make it your own. And then you're like, hey, I took some stuff that Mike taught. I took some stuff that Bob taught. I took some stuff that I got from somewhere else that I found was really good and resonated with me. And now I've rolled and I've made it my own. And now it's in my trading plan. And look, I've taken these things and I've embraced them. And there's nuances I want to trade. And I might not do everything the way Mike does it, but that's okay because I am profitable and that's what I wanted to be long term. Not everybody has to trade the same way. There are core things. Manage risk first because that's going to keep you in the game. I'm not trying to make clones of me. I'm trying to teach people a mindset and a methodology that then they can make their own. If you've noticed, this is my last little bit, then I'm wrapping this up. If you've noticed, do I go all over the place with like, oh, let's try this today. Let's try this today. It might be boring some days because he's going to draw the harmonics now. He's going to do this. Oh, I see that clear path. I know that stuff already. But you know why it's repetitive? Because it works. Because I can come in here every day and do stuff that works. Not that I'm trying to go, let's see what the new hot indicator is today. Let's see what the new thing TradingView released. Oh, is there something else that's going to make me a better trader? No, you manage risk. You know your targets. When the things are targets, you take either profits or you manage your stops. Just taking those key concepts will make you a better trader. Then, how do I get higher probability targets? How do I know when things could run? Well, that's why we teach patterns, and that's why we teach things like clear paths. Well, we're at cycles. Weekly and daily cycles are at the bottom. Maybe this can run more. We're going into a clear path move. Maybe I still use my targets, but I'm going for a slightly managing my risk first. But now I'm going to let things run a bit more and keep ratcheting up my stop as I hit these clear path targets. Great. There are core things. And then if you want to use other stuff, like you want to use a MACD, go right ahead. I don't care. But come up with your plan and your trades and learn. That's what I'm trying to do here. That's why I'm spending this time with people. You notice this doesn't make me extra money. I mean, I appreciate the donations from everybody, and you know what? Hopefully some people will donate some more because this is my time, and I'm not sitting here trying to be a full-time YouTuber with 100,000 subscribers, pumping stuff. As you notice, you don't want to know something? I get reached out now because we're growing constantly. I got reached out last night to promote NFTs on the channel, paid sponsorship to promote NFTs. You think I'm doing that? No, because I think it's garbage. Yeah, you know what? I could get endorsements 5 or 10 grand to pump stuff on this channel. I've been asked. You think I'm doing that to everybody here? No, because if I endorse it, then I expect, it better be good. So I'm not doing, you're welcome, Lawrence. I'm not doing, Lauren, I'm not doing that crap. I've noticed that the longer you stay in the trading game, you either love it or hate it. It'll make you mentally tough where you don't freak out at the other areas of life either. Yes. And a lot of people do better longer term trading. It's what this tactical environment does now is teaches you that, this is not the time to just back up the truck and go into long-term positions. Hopefully in the next 6 to 9 months, possibly even a year, we'll get the signals that it's all right, it's trying to back up the truck. Let's get in a lot of longer-term stuff, and trading gets boring. Yeah, you can trade some shorter-term stuff like the S&Ps and everything else, but let's just go into longer-term trading mode. Let me just check something out with the VIX. Hold on. Can somebody give me the real-time VIX information? Because this is delayed and I can't flip to my other platform that's on another screen right now. At least first and second targets hit on that double. I just want to see. Let me look at something else real quick. Sorry, I just need to get some things in my head. Sorry, wrong one. Where is it? Crap. I don't have it on this. Here we go. Nope, I don't have it on this platform. So that's where, yeah, reversion to the mean is a very strong force. Keep it simple, exactly. You're welcome, Michael. Hey, thank you, Panvi. I really appreciate you being here. Everybody, big shout out to Panvi. I hope I said that. Pavneet. Sorry, Pavneet. I did say it wrong. Pavneet. Say it. Pavneet. All right, VIX 22.28. All right, sitting against this prior level. So if that continues up, I'll be watching for the bigger breakdown move in the next 8 minutes. But just, again, everything's going to key off of Powell. This could just be some stop hunting right now right here. This could be some stop hunting. So again, this is why I'll start getting a bearish mode 4180 back to bullish mode 4200. In this, it can be chop and slop. I don't need to play in chop and slop. Thoughts on Hey, see, we're getting more people. Vanille. Thoughts on Tesla? Again, everything's going to key off of what Powell does. First and second targets just filled the gap. On a move, if the market takes off again, use 299.50 as the next target, and then about 300 to 301 as the next target up. Longer term, we have still not invalidated this potential double top, and I know people will watch this as a triangle. But you need above 305.84 invalidates this potential double top. Right now, Tesla's in a consolidation pattern. If we start breaking below yesterday's low, I would personally shift to bearish mode at least. And then also watch this. Let me do this. Oops, crap. Watch for this. Off this, I got to reverse the harmonics now. Watch for the close back below 292.60, and that would confirm the retest of the lows. So we'll be in more bullish mode if it gets above 305.84. Should retest the highs. Below, on a closing basis, 292.60 should retest the lows. Well, thank you. That's a very nice comment, Fanil. I hope I said your name right. Again, big shout out to Pavneet. So there's where we sit. Right now, it's in no man's land on Tesla. But you also, below this 62.5 harmonic, you get the close also daily basis below that rotation zone. Target the lows. You get the close below this low from August 9th. You target the lower price action. Above here, you then target the higher price action. All right, with that, I got 5 minutes, and now I really got to prepare for the Powell stuff. So just see, this is why you don't want to. This is why I didn't mind teaching longer today, because I don't need to trade within these ranges we found already. I don't need to do anything because it's stop. This is classic stop hunting, going into stuff. Now you will get the shake and bake below this 4182, 4180 level. But this looks like trying to suck people in for people trying to, larger people trying to position themselves bullish. And it might not be. Remember, the last few speeches Powell's given, there's been a rally on every one of them. That's somewhat conditioned. People get conditioned like Pavlov off of recent stuff. And I think more so people are still expecting a rally. So that could happen no matter, even if he's hawkish. But those are the two things. They're still in play. Those are the two things I'd suggest watching. And then if you're trying to play the Qs or the spiders, focus on the futures and then use the Qs and the spiders to play the move. I'll be working on that more this weekend, Michael. And I did come up with some more stuff to put in there. That's why I wanted to make it even better for people. If people are going to spend money and buy stuff, it's got to be what I consider really good. For people to buy. Not that it wasn't good before, but I really wanted to be really help people. Not just trying to pump stuff out to sell stuff to people. All right, Rich, thank you for being here. Again, I'll do a quick wrap up this afternoon. Won't be long. And then we'll be back on Sunday. Everyone have a great rest of their trading day. Be safe. If you don't have a setup or you're trading longer term, you don't have to trade every move.